And so on the demand side, we're seeing good demand, solid fundamentals. And on the supply side, when it comes to apartment deliveries, California traditionally have a much lower supply due to difficult and long entitlement process, NIMBYism, and some of the other characteristics.
Joining me today is Angela Kleiman, President and CEO of Essex Property Trust. Now, you recently took over as CEO of Essex from your predecessor, Mike Schall. What are some of your priorities for the company as you look to the future?
Well, I've been with the company for over 14 years, and prior to that, I actually invested in the company, and so certainly is a strong believer in the strategy. And so the plan here is to maintain our capital allocation discipline and continue to innovate. And we have transformed our operating model over time to be much more efficient. And so leveraging technology and running our properties, 8 to 12 properties is one business unit, and that's unique to how other multifamily companies approach that business. And so we're going to continue on that strategy as well to improve our operating efficiencies.
And can you talk about fundamentals in your core West Coast markets, including the supply outlook and whether you're seeing an impact on leasing levels from layoffs in the tech sector?
There's been a lot of headline on the tech sector, and just a little background on that. I think people forget that during the pandemic, California was so shut down that all the hiring occurred outside of California. And so when it comes to the layoff, the vast majority also occurred outside. And so on that front, when we look at WARN notices, which is a filing for layoffs, only about 16% of the layoffs occurred in our market. And because of the proliferation of new innovations such as artificial intelligence, about 90% of layoffs have been quickly rehired. And so on the demand side, we're seeing good demand, solid fundamentals. And on the supply side, when it comes to apartment deliveries, California traditionally have a much lower supply due to difficult and long entitlement process, NIMBYism, and some of the other characteristics. And so because of that, that has limited our supply. And when we look at especially Northern California, for example, supply is actually lower year over year this year by over 20% compared to some of the other areas.
And how active do you expect Essex to be on the acquisition, disposition, and development front for the remainder of this year?
Well, that's a great question, because where our cost of capital is, or where the multiple is, it's difficult to pencil acquisitions, and development yields are tough because higher construction costs, shortage of labor, some of these challenges. What we have done in the past is, or most recently, is to continue to arbitrage between the cost of capital and whatever the investment vehicle is, where we can find the greatest return for the shareholders. And most recently, it's been with stock buyback. So we sold some properties, about 2 properties that were in, with yields around mid 4%, redeploy that and purchase our stock, which is trading closer to a 6 yield. And that was a great win for our shareholders.
And how would you describe the outlook for the multifamily sector more broadly at this time?
Well, I think the multifamily sector has a lot going for it because it's a fundamental need. People need housing, and there is a shortage of housing nationwide, most acute in, of course, our markets. Having said that, with migration patterns and international migration coming back into the U.S., I do think that demand will continue to grow. And so on the supply side, it'll be a little bit different, pockets, depending on where you have your portfolio is. But broadly speaking, relative to just even the capital markets, for example, there are more funding available. So multifamily has Fannie and Freddie, and the insurance companies will step in as well when the capital markets are disrupted. And so there's just a lot more flexibility with this asset class.